Good afternoon, gang. Good evening, good morning, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only. And now that's out of the way, let's jump in to the Bitcoin chart. So we've had a week of sideways price action. Obviously, when you're looking on the macro scale like this, it looks like nothing. But when you zoom in, it's actually been a really fun week, especially for the members in the group, because this is our bread and butter when we've got sideways price action like this. So today we're going to run through some of the trades that we've taken in the group today, and I'm also going to explain why we've taken those trades so that hopefully you guys can learn from this. And then we'll start to talk about what we're looking for on our next setups, okay, moving into the rest of the week and potentially into next week as well. Now, before we get into that, first and foremost, big shout out to PrimeXBT. If you don't know who Prime are, they are a crypto exchange, but not only can you trade crypto, you can also trade FX, stock indices, and commodities. And the beauty of these guys is you can use crypto as collateral. So whether you're using USDT or BTC, you can use that to trade the Forex, stocks, or commodities. If you do want to check them out, check out our link down in the description. And if you use our link, then you can get up to a $7,000 deposit bonus. Beauty of these guys is they are no KYC. And they do have a full list of restricted countries on their website. So if you do want to check them out, click on the link below. Okay, now that's out of the way. Let's zoom in, 30-minute chart, and let's talk about this sideways price action. Now, to a lot of people, especially people that like the trend, maybe people like long only, this kind of price action that we've seen over this past week has been horrendous. A lot of people call this chop. In fact, if you just have to scan through crypto Twitter or crypto X, and you'll see that so many people are getting absolutely destroyed in this sideways price action. And bear in mind, from top to bottom, we are talking about a relatively small, less than 5% range. Okay. So it's, you know, it's not even a $3,000 range, but people are losing money hand over fist in this. And this is where you need to be a technical trader to get involved in this. And obviously, if you don't want to be a technical trader, that's absolutely fine. Just sit back and stay out of price action like this. That's absolutely fine. If you make more money in a trending environment and you can consistently make that money, you do you. And leave the ranges to the traders who like these technical ranges. So what I'm going to talk you through now is I'm going to talk you through some of the trades we've been taking. And you probably can hear the excitement in my voice because this week has been great. This week has been great. It's been so technical. It's been ace. So we'll start off on Thursday. So obviously after the last video that we gave to you guys, I'm coming into the group in the afternoon, and you can see here, telling the members, this is what I'm watching, very low time frame, ugly 3 drives, okay? And the reason why I'm saying it's an ugly 3 drives is because it really wasn't the most pretty 3 drives pattern. But what we had is the 3 drives pattern. Now, this is one of my favorite patterns to trade. Anyone in the group knows it's one of my favorite patterns because it's a reversal pattern, and I personally like reversal trading. It's just how I work. But it's one of many patterns I teach. And what you can see here is we've got this 3 drives pattern. Absolute beautifully into a high. Okay, now from this high, it was a very nice high, by the way, because we do have a range within this. So I'll come back to this range shortly. And effectively, this high caused a little SFP of the previous high. We'll come back to that shortly. What we had is lovely 3 drives pattern. Okay, and then the target, the technical target of the 3 drives pattern is the start of the 3 drives back into the golden pocket. So in the end, nice, easy trade. Great way to end last week. 4R in the bag. You just can't get that any better. Okay. And obviously you can see here this from the Thursday live stream that morning. I was looking basically for this high getting taken out. But at this point, I didn't actually spot. And again, I'll hold my hands up. I'm not perfect. I didn't spot the 3 drives until later on in the afternoon. I was playing around with it. Spotted the 3 drives. That gave me the confidence that we were going to take these highs and then have a nice trade. Once again, I'm not going to say I knew this was going to happen. I could have been wrong, and price could have just gone straight up to the moon. It could have happened. It could have happened. Again, I'm not going to laugh. I'm not going to say, I know this is going to happen. I know this is going to happen. This is just what we were trading. So this is what I was sharing with the guys. So that was Thursday's setup. Now, the beauty of the 3 drives pattern, even though this was low time frame, the 3 drives pattern is technically a reversal pattern. So we can say that it's not necessarily a macro reversal because we were looking at this on the 5-minute chart, by the way. It did go all the way up to the 30-minute chart. So I'm not looking for a full-on macro reversal, but I'm looking for a bit of continuation to the downside. That's the beauty of this pattern. So what I'm looking for is price to come down into our target zone, which is what it did first, then have another rise off this, and then come back down. And the options down at these lows, I had two options at these lows. Once again, I'm going to talk you through this, and I'm not going to bullshit you guys. There's one option where I was looking for this not to hold and it just to go straight down to this zone here, fulfilling another double distribution day setup. So that's what we've got on the cards, and this is what I've been talking about for the members live streams. Okay, so if we lost this local range and got acceptance back into these single prints here, I'll map this out for you. We've got some single prints down here. Okay, we've got acceptance back into these, then I'll be looking for it to travel to the other side and therefore fulfilling the double distribution day. Okay, now in the end, we didn't get acceptance back into those, and this happened over the weekend, but we came back down to the outer range deviation. Okay, so this is our deviation fib that we use in the group. Came back down to the outer deviation, and then we had a lovely bounce. Okay, so this is what we were looking at. So a lot of the guys that didn't catch this trade ended up catching this trade here, getting back up into the range high. Bear in mind, we had one tap of the range high, we pulled away, we had a swing fairly pattern of the range high, collected those stops, came back down, came back up into the range high, tested it perfectly, and then we got the rotation foot through to range low. Now, that brings us on to Saturday. Typically speaking, I'm not in the group on a Saturday. I share my my weekend thoughts on a Friday evening before I clock off, because I like to spend the weekend with my family. That's what I do. I work hard during the week and I can spend the weekend with my family. But in the end, what do? We came in and I'm updating the group. You can see here at 3:20, which is roughly around here. No change to my plans from yesterday. Needs to show strength ideally, reclaim the range lows for any chance of a decent bounce. Otherwise, I'm looking for the double distribution day out to play out. So once again, looking for that double distribution day to come back down into this zone here. Okay. In the end, we've got a breaker structure and a lovely long trigger. Okay. Once again, I didn't play this because I'm not in it on a weekend. I'm not interested in trading on a weekend unless we're in some macro zone. But quite simply, we came down, we came up, we came lower. 5-minute chart, broke structure. There you go. You got your entry. This is one of the entry criteria that we use in the group. Straight down into the fun zone, and there you go. You got your trigger. And by that, from there, guys in the group that were trading this weekend got that trade. Stops below the low, nice and easy. And where you're targeting, well, you're just targeting range highs again. Okay, range highs. What did you get? You got another range high trade. So if you'd have caught that one, there's another 7R. Happy days. Very simple. Very simple. It's not complex when you really think about it, but it's understanding what's happening at these levels. Okay. So that's going into the weekend. And then after the weekend, again, another nice trade for Tuesday. Now on Monday, I'm coming in, doing my Monday morning update. I'm saying I'd like at least these highs to be taken, but I'm also conscious of the outer deviation fib on our range fib. Okay, I'm also conscious of this. So you can see I've got two options, either here or here. Okay, in the end, we could see on the order flow, once we got above these highs, we got bulls trying to go crazy and the breakout traders going crazy, aping in, but price just stalled. It didn't move any higher. And this is something that I teach within the group. Okay, what's the market trying to do? That's the first question you've got to ask. What is the market trying to do? Well, the market's trying to aggressively long. Are they doing a good job? That's the second question. Are they doing a good job? Well, they're aggressively long, but price is not moving. No, they're doing a bad job. In that case, someone else is sat there, not necessarily one person, could be multiple people with limit sells there that are just absorbing all these aggressive market buys, and then price just returns. And what did it do? It just came back down to range lows for another nice bounce to range highs, for another bounce to range lows. This is just, it's a great range. It is a great range to trade. Okay. So that's effectively how you trade this chop price action. Okay. Once you've identified the local range, okay, once you've identified the local range, it makes life a lot easier. But what we keep seeing again and again, and I'm hoping I'm going to save some of you guys some money when you're watching this, especially if you're not in the members. Okay. When you've got a very clear range, okay, a very clear range like this, the trick to trade this range is to assume that price is going to keep internal to this range. And if price does go external to the range and then gets back in, then you treat it as a deviation. And you let these people that have tried to long this or long this or short this, or short this, or as we saw once again yesterday, this first drive down yesterday, there was a lot of aggressive sellers coming in here, brand new sellers coming in, and they're all getting destroyed. They're all getting destroyed. So that's not how you trade when you've got sideways price action like this. And again, people refer to it as chop. If your go-to trade is a breakout trade, then you need to avoid situations like this. You need to avoid sideways ranges, especially when they are so clean. It's very rare that you get such a clean range like this. It's very, very rare. It doesn't happen often, okay? It really doesn't happen that often. But when you do get one, you really don't want to be trying to trade these breakouts, okay? Because all it's doing is suckering you in and then reversing on you, which for a range trader like myself and like the guys in the group, this is just so easy because we can see you guys trading these breakouts. We can see you by looking on the order flow. Okay. Let's put the highs. The blue bars, just to make this really clear. The blue bars are market longs. Look at this. So you get above range high, you move up. These blue bars are market longs. Market longs. They're not necessarily all brand new orders. Okay, some of these are shorts getting stopped out, which in turn creates a market long. But a lot of these, if you zoom into a lower term time frame, you can see a lot of these were brand new market buys. Okay, and what happens? The minute that they go underwater, these guys all puke, and then we're back in the range. So we just continue to trade in the range and we trade it lower. Just like if we use yesterday as an example. Yesterday we had a great example. Yesterday, what I was looking for at these lows, by the way, because what we did is we took out previous lows. So we can see here, they're the previous lows into the range low. We took out those previous lows, and what I was expecting to see here, which I didn't, and it kind of surprised me a little bit, caught me off guard, I'll be honest, is I was expecting to see these purple bars, which are market sells, I was expecting to see these being people that were getting stopped out from their longs over here. But to my surprise, it wasn't people getting stopped out. It was a load of fresh shorts coming into the market, and very aggressive. You know, you see the open interest, very aggressive shorts. So you look at all these, you know, people think that when you're trading with large volumes, like, you know, like these 2.1 millions, 1.2 millions, 1.5 millions, people think that just because someone has money, they know what they're doing with trading. But the truth couldn't be further from that, okay? These people will aggressively short in the breakdown, trying to get that follow through. So what's the market trying to do? Well, the market's trying to aggressively break down. Are they doing a good job? No. So what's the market naturally going to do? It's naturally going to reverse in the opposite direction, to the upside. So this is the beauty of being able to understand this. That's why I created these templates, to make it so it's so obvious to see what's happening at the highs and the lows of this range. And once you see what you want to see at either side of this range, you can either A, take the counter trade, or B, sit back and do nothing. And sometimes you will see everything. The stars will align. Like, for example, this one here. The stars will align. There were the breakout traders all going crazy ham trying to short this. Okay? And you could have seen that on the order flow and gone, yep, good opportunity that. Cool. Once it starts getting back above, great, I'm going to get involved in this. Stops below the low. I'm going to be targeting ideally for the EQ. Then for the range high. That's what you're looking for in an ideal world. Okay, and what could have happened is these breakout traders got priced back up to the range low and then got the follow through they were looking for. But likely it is what happened is these guys that shorted down here, likely price pushes up, stops them out, and then it rolls over. Okay, so just understand how to trade, understand psychology. Okay, understand where. If you think, if you're one of these people that loses trades again and again and again, think about where your stop is going to go. Next time you take a trade, think about where you plan on putting your stop loss. And then don't take that trade and then watch where price goes. It probably goes to where you were going to put your stop loss. Okay? Just like up here. Okay? Stops people out, comes back down, gets people to FOMO in, and then it comes back down. Gets people to FOMO in and goes back up. And it's just this perfect range. Anyway, I'm going to stop waffling on about that. Hopefully you've learned something in that. If you have, let me know down below. And if you do want to learn how to trade this, come over to our website. Links down in the description below. SpitfireTraders.com. From here, you get access to our free Discord. You can read loads of stuff in our free Discord. It's all free. And if you do want to jump on the course and start to understand and learn how to trade like us, then come join us. It'll cost you the grand old price of 100 USD a month. Okay? Staying for a month. If you don't like it, leave. It's absolutely fine. There's a reason why I didn't overprice this course. Because if it's not for you, fine, leave. And if it is for you, stay. Completely up to you. But within this course, you'll get access to all of our educational content. So daily trading plans. These are my personal trading plans every single day of the week, Monday to Friday. You get our high time frame swing ideas, which not just covers Bitcoin, but it's also the stock market, altcoins, Forex, everything. And then obviously you get all the modules. Okay. Learn how to trade a range. Learn how to trade the 3 drives pattern. Okay. Learn how to read order flow. Understand Elliott wave theory, understand psychology, probably the most important modules in the whole course. Okay, altcoin, strategy building, accumulation distribution. There's so much in here, okay? So much in here. Stay for a month, absorb all the information and bugger off. It's cost you $100. Well done. Happy days. Okay, right, now we've got to start talking about what's next, okay? So, I'm going to sound like a stuck record when I say this. Above us, there's not a lot of resistance left, okay? So we've got a volume profile there. We've got a fib from the high to the low, pull that across. We'll try to get it as tight as possible. And what can we see here, okay? So above us, we still do have resistance. Not much, as I say. If we can successfully push up and take out these highs and hold above here, above this 707, okay, and in turn, value area high, then we can start looking for higher prices around this 786. Okay, around this 786, it's the last sticky zone. You can see here in the volume profile, it's the last major volume node that we've got to contend with here. If we can start to flip 57, 58k, then realistically we can start looking at contesting the highs. That's when everyone gets a bit overly bullish. Okay, if we don't get beyond 57, 58k and start to reject here, then potentially look for hedge positions. Okay, either way, around this zone here is a time to be cautious and watch patiently. Okay, is the market breaking up? Is the market breaking down? Or are we just going to get another range like what we've got right now, which is going to chop a load of people out before potential continuation or reversal? That's what happens. Now, if it starts to break down from here, first and foremost, we said this last week, we've got the point of control, okay, just below here. Now, you guys also know, if you were paying attention earlier, we do have the chance for a potential double distribution day just below us here. If we do come back down to that and get a good reaction, then that's something to pay attention to, but that could be more low time frame than anything else. If it does start to come lower than this point of control, then realistically, I'm going to be looking at this level here, which is roughly coming in around 42, 43k. And if we start to lose that, it's not going to look very good. And I'm going to be looking at least the 38.5. Okay. So they're the major levels to be aware of right now. Lose where we are right now. We could come just a little bit lower, down to 49, 50k. Lose that, then I'm going to be looking for a bigger drop potentially to the point of control first, and then lower down. Okay. If we go to the upside, we need to reclaim 53, 54k. And if we can reclaim 53, 54k, then I'm going to be looking up towards 57, 58k. Okay. Each one of these, bit of a zone. They're not exact levels. Everyone expects really exact levels when it comes to trading, but it's very rare, especially when you're looking on a macro time frame like this. Okay. Right. And that wraps up today. So once again, if you've enjoyed today's video, hit that like button for me. Helps us with the algorithm, and I would appreciate it massively. And if you're not subscribed, consider subscribing. All right, team, as you were. Bye-bye.